Welcome to the Learning Machines podcast. Today, I'd like to introduce someone who's a close personal friend and mentor, Jason Hill. Welcome to the podcast.
I'm glad to be here.
Thanks for coming, man.
Yeah.
I did not know what I was walking into. This is amazing.
Yeah, man, you're our first guest.
Right on.
Yeah.
It's an honor.
It should be. No, I'm kidding. No, man, I really appreciate you coming on. If you want, go ahead and, talk a little bit about yourself.
All right.
Yeah, man.
So I was born and raised in Las Vegas. I've been here my whole entire life. Besides 2 years that I got to get away and play basketball in Wyoming in junior college.
Oh, nice.
A product of a divorced family. My parents divorced when I was probably like third, fourth grade. So that had a lot to do with shaping me in regards to who I am today, I feel.
Yeah.
Basketball has always been a huge part of my life. There was an elementary school across the street from where I grew up, and like literally as soon as I could dribble a basketball, I would be there like every day after school until the street lights came on. Totally one of those situations. The area that I grew up in, super, by the Boulevard Mall in Las Vegas, it's pretty diverse culturally.
Right.
Yeah.
And I was like always the white kid that was like hanging out. And I feel like that had a lot to do with shaping me. I was like the minority growing up.
Yeah.
And I feel that, again, that like put like a ton of work ethic into me that, I may not have had otherwise. It allowed me to understand, coming from different places, like how you can find common ground. And, some of my best friends were people that didn't really grow up on the right side of the tracks.
Mm-hmm.
And found myself in a lot of interesting situations growing up.
Yeah. Sports has a kind of a very particular way of doing that to people, building in that sort of like camaraderie and like motivation and things like that.
Yeah.
So it can play. I feel like it always can play like a big role in someone's life early on, and it can manifest itself later on.
Especially when people come from like different backgrounds. It's like you're all playing the same game and you're all in the same level field, no matter what household you grew up in.
Oh, absolutely. So where'd you go to college, Jason? Played ball there too,
So
right?
So in high school, played basketball, was like fortunate, won state championship. It was like a really cool experience.
Yeah.
And then I was 6 foot maybe and 160 pounds, and like the college offers weren't exactly like streaming in. So it's funny because me and a few of the other guys from my high school basketball team got an opportunity to go to Casper College. But it was like my second year of college when that happened. When I graduated, I went to UNLV for the first year, and I had like aspirations of walking on to the basketball team there. Didn't really like pan out.
Yeah.
And then joined the fraternity that we were in together. A lot of the guys that went to our high school, that was like the highway into that fraternity. It was like made up of guys that went to Valley High School. And so I went to I went to college at UNLV my first year, pledged, did horrible in school. Like I was like a great student in high school, but then like probably too much freedom. I was working a full-time job, doing the whole fraternity thing, and just really didn't ever show up to class. And then I had an opportunity to basically one of the guys that from my high school team, he went to Casper College, and he told the coach, I was on like a state championship basketball team. None of these guys are really doing anything. Like, let's get some of them up here to Wyoming. And then it turned into like an opportunity to go out there and play.
Very cool.
And so like really, go ahead.
Yeah, it's a really interesting place to play basketball, especially coming from a place like Las Vegas. There's probably just a completely different
culture shock for sure. Yeah. So like Casper, Wyoming is like on the border of like Nebraska and Wyoming. And it's actually the biggest city in Wyoming. And like their basketball team, like we were like nationally ranked both years I was there.
Wow.
And it's just like going from like Las Vegas, which at the time probably had a million people, to like Casper, Wyoming with like 36,000 people. And great experience. Just, got to grow a lot being away from home for the first time.
Yeah.
Traveled all over the Midwest by bus, which was like horrible.
I can imagine.
Oh, yeah.
Casper is also the windiest place in the United States. Like Chicago, they call it the Windy City, but like technically, because nobody's heard of Casper, Wyoming, like it's windier there than it is in Chicago.
Yeah.
And so like if the snow is not coming down, the wind is blowing the snow that just fell somewhere. And it was a great experience, though. Like, got to play against a whole bunch of great players. One of the guys on my team that went to high school with me, he actually went to Gonzaga and was like a starter on their team for the 2 years he was there. He was a stud in high school, but he was like 6'4" power forward. And didn't get any opportunities. Ends up in, like, he was like the Gatorade Player of the Year in the state of Nevada, and didn't have like any college offers. Somehow somebody from Casper College like found him and brought him in, and then he was like a junior college All-American 2 years in a row.
Mm-hmm.
Went to Gonzaga, had like a great career there, and then he actually was like the director of basketball operations there for like 12 years.
Oh wow!
So he had like a cool story.
Yeah, that is a very cool story.
So like after 2 years in Wyoming, I came back to Las Vegas because all the opportunities that I had, again, 6 foot tall, 170 pounds at that time, there was like, you know, all the opportunities I had were like NAIA Division III, Division II, and like those are all private universities, so the tuition is like crazy.
Right.
Like even back then, it was $30,000-$40,000 a year, and like I couldn't see myself going into $25,000 a year of student loan debt to continue to play basketball.
Yeah.
So I came back to Las Vegas, and I was like a student manager for the Rebels for 2 years. And for the basketball team, and I got to like travel with them and learned a ton about basketball. Like honestly, at that time, I thought that was like the path I was going to take. I was going to be like an athletic trainer or like somehow get into coaching, and my life revolved around basketball still at that time.
Yeah. So after basketball, kind of after college, what how did you enter the workforce? Like what was that like?
So the fraternity, again, like a lot of people knock being in fraternities, but like most of my best friends and most of my influence comes from people that I met during that time. And there was a guy that was a senior in high school when I was a freshman. His name was Norbert Jerfy. He was like my mentor. Like I was always trying to like, you know, hang out with the big dogs. And so like I followed him from, you know, high school into college, joining his fraternity. And then he got into the mortgage business in like 2000, right after he graduated. One of his uncles, this crazy guy named Kurt Bausch, had been in the mortgage business forever, and got Norbert into it. And so like every day after practice with the Rebels, like Norbert had his own office, and he was like, you know, 23 years old. And I was like, how cool is this? This guy's like, you know, got his own, like set up his own business. So he was one of my best friends. I would like just go in and hang out with him. And just, it was funny, man. Like I'm like a good mentee, you know, I'm like a good protege.
Yeah.
Because I'm coachable.
Mm-hmm.
And so I like just appreciated like going in and like him explaining what he was doing. It wasn't like he was like trying to recruit me, or it was like I was trying to become a loan officer. I was just like, oh, this is cool. What are you up to?
Mm-hmm.
And I just learned the mortgage business from him. And he had like huge aspirations of like creating a huge team. So like I was his first student to like, you know, listen to like how his course was going to go down.
What year was this?
2002, 2003. Mm-hmm. So like I believe it was like 2002 when I like actually started going in and hanging out in his office.
Yeah.
And then 2003 is when like, you know, I was like, I'm probably going to just stop this whole school thing or not be as into, you know, the basketball in the school. And just like, I saw how much money he was making, and I was like, wow, this is amazing.
So you're 21, 22, 23 years old, and
Yeah.
you're jumping right into the mortgage business right out of. Did you finish college before you started working?
I did not.
Oh, okay.
I did not. Yeah. And so it's funny because like growing up, I had like a lot of jobs growing up. In high school, I was like a busboy food runner at a couple different restaurants. I worked at a couple of different swimming pools during the summer as like a, you know, cabana host or like a pool attendant. So like all the jobs I ever had, like I was super fortunate.
Right.
Where like I was making like tons of money. Like I remember walking around like high school, and for whatever reason, I thought I was like always had like $800 on me.
Yeah.
I think that's like an interesting thing about living in Las Vegas is that
Sure.
you can be working as a cabana, or you can be working by a pool as a very young person and just be making
Insane.
an ungodly
Yeah.
amount of money.
Yeah, because there would be days that I would like leave the pool, and like I would have $1,200-$1,500 in cash.
Oh, yeah.
You know, and I'm 17,
Yeah, as a
18.
17-year-old.
Yeah, and like you have like a really distorted view of the world being born and raised in Las Vegas. like I had a fake ID before I had a driver's license. And it was because like there's just like at that time there wasn't a ton of other stuff to do.
Yeah.
When we would throw parties, it wasn't like a house party. Like one of us would like get a ton of courage and go rent like a suite at one of the hotels.
Yeah.
We'd have like 50 underage kids in like a suite at a hotel.
That is such a Vegas
God.
thing to do.
Yeah. And like you go somewhere else as like a 20, 21-year-old,
Right.
and you're seeing what they're doing, and you're like, oh man, this is like, all right, like we're gonna like sit and like have a fire and drink, like we were like, I can remember being a senior in high school and playing blackjack at the Stratosphere at like 4:00 in the morning and like winning like $3,000.
Yeah.
And like I could barely walk, and I'm like, looking back on it, like I couldn't have looked more than 16.
Yeah.
Yeah.
Like why wasn't I getting dragged out of that place? But again, like I felt like I dodged a lot of bullets growing up here.
Yeah. Yeah. I think a lot of people growing up here in Vegas kind of feel that way, because I definitely feel that way too in my own kind of perspective. But that's interesting you shared that. Yeah. I always felt that. I always call it the conveyor belt of Las Vegas. You can just fall into those traps.
What do you mean by conveyor belt exactly? Because I hear that term a lot, but
I mean, I always feel like that term represents, and it only specifically to Vegas, like you can be, like Jason said, 17, 18 years old, 19 years old, and be making, make $5,000 on a Friday, Saturday, Sunday, and like you're making more money than like, I mean, you could be literally living at home making more money than your parents. Mm-hmm. Like in that lifestyle, you get sucked in and you just stay on that conveyor belt, because when you're young, you're not thinking about the future or some things like that, and it's like it's a very short window that you have to make that amount of money. And usually kids, right when they get out of high school and they have those jobs, get the condo or the house, the nice car, all those kind of things, and kind of put like school on the back burner or something like that, and think, oh, I'll go later, that kind of thing. And like
total golden handcuffs. Like, that's
yeah.
another good phrase for it.
Yeah.
Because I still have friends today, like I'm 42, and they never got out of it.
Yep.
Like there was a guy that was a cabana host at the same time as me at Caesar's Palace. And like I remember being like 35, 36 years old, and this guy coming to me, and he still worked there as a cabana host.
wow.
Yeah.
And it's like, I get it. You're working, 7-8 months out of the year. He's probably like, taxable income, who knows what he really made, but like taxable income, like $60,000, $70,000 a year.
Yeah.
And then, a lot of like undocumented, like untaxable income. And he's sitting on a ton of cash. And it's just like, he never had the real like drive to do anything different, because like life got easy.
Yeah.
And I think that's like you say, conveyor belt. Like you see a ton of people in Vegas that have like come here from like outside of Vegas, especially while we're in college, and just completely burn out.
Yeah.
In like weeks, weeks or months. People that had, they come here from like great families, tons of money, like were raised correctly, and you get kind of thrown to the wolves here in Vegas. There's just so much like opportunity to do.
Absolutely. Yeah. You come in and you're making that sort of money when you're like 19, 20, 21 years old. And a lot of people I feel like have the mindset this is going to be forever. And you never picture yourself when you're like 40.
Yeah.
Because
life happens quick, right?
Life happens quick, and and that's not your sort of mindset. It's I want to buy the super nice car that I don't have, and I want to get the super nice condo and all these sort of things, and you're just on this like this conveyor belt of money that's coming in, and there's no forward thinking.
But the thing that's crazy about it is it's like a good living, but then you realize there's like crazy levels to like everything in life. And so like that is like a really like dead end level, like you're only going to go so far. Like that glass ceiling's like right there. And again, I was super fortunate. Like Norbert got in the mortgage business, kind of pulled me away from like what I was doing. And I always had aspirations. Like it's funny, if I go back to like some place in high school, this is like something that's very vivid in my head. I thought that I would have made it in life if I was like a valet driver at the Mirage, and I was making like, $80,000 to $100,000 a year.
Yeah.
Like that was like literally like the like extent of my, like, man, that would be, I could retire and, I'm going to do that for 18 years. I'm going to run around and park cars.
Yeah.
And a lot of people, I think, get like drug into that like frame of thought here. Like my Dad was in the service industry from like 1957 until like basically until he passed away in like 2010, 2011. And never really did anything outside of that. Just, he made great money, he had a whole bunch of great stories, but I was able to like realize that there's like so much more, out there. So like getting involved in the mortgage business was like a blessing for sure. It's like a blessing and a curse because it's a job that is like super rewarding but super stressful. There's like a lot of like layers to that onion with the mortgage business. So I guess sorry for that 20-minute tangent.
That was wonderful. It was great.
Tangent.
Yeah, just if you want, you can fast forward to
So like we get into like Norbert wanting to like start a team. So like he's very like type A. He's like Stifler from American Pie, and he's like great at organizing, great at like motivating. And so he basically came up with like a course on like we're gonna teach people how to be loan officers. We're gonna do it 3 days a week. Anybody that wants to come take this course can come check it out. It's $400. And so like I was, kind of the guinea pig, me and a couple other people. And then flash forward like 6-8 months later, the mortgage industry is just exploding because of the like ease of credit. If you had a pulse, you could breathe on a mirror, you could get a loan.
Now we're talking 2002,
2003, 2004, 2005.
Okay.
And so it's like, just kind of setting up the powder keg of the Great Recession and like, what's happening, like we're kind of on the forefront of the banks and Wall Street pushing these super easy loan programs and showing, like the masses, because at that time it was like the Wild West. If you wanted to be a loan officer, like literally fill out an application, get a fingerprint card, go out there and start selling.
Yeah.
Can you walk us through how a loan process application would typically work back in those
then,
days? Like if someone comes in and they want to buy a house, like what were the things that sort of resulted in that powder keg getting filled up?
So is basically there were so many options that everybody could get financed. So you could figure out really quickly. So like, what do you do for a living? That's something where you're not documenting a ton of the income. Your tax returns aren't going to look right. You don't have the right W-2s to make this happen. So like now, all right, so there's stated income. Well, you have too much debt. So like we can't state enough income to make it make sense, because if you're stating an income, it had to be like realistic. You couldn't say like, a waitress at Denny's, which we tried once, was making like $11,000 a month. Like it didn't make sense, right? Like the underwriter had to be like, all right, so this is believable.
Right.
And after a while, I even feel like the underwriters were just like, all right, so whatever, like everything's believable at this point. But like, let's say it didn't fall into a stated income category. Now there's no ratio. So now we don't even put an income on the application. Now, if like for some reason the no ratio doesn't make sense, you can move to no doc.
What does no ratio mean?
No ratio means like when you're taking out a mortgage, there's something called a debt to income ratio.
Okay.
So we're looking at the debts on your credit report. We're comparing those to the income on your loan application. And so like in most cases, your debt to income ratio can exceed 45% of your gross income. So that debt to income ratio is going to include your proposed mortgage payment and any debt showing up on your credit report, car payments, credit cards, student loans. And so like with no ratio, you didn't even fill in like the income portion. It's
And
just
that was completely okay.
they had ninja loans, like no income,
What a fucking name.
just assets or something like that. Like it's just like they had like basically financing for everybody. And it was, supposedly actuary people out there figuring out, so like based on this extra level of risk, we're going to raise rates this much. But like everything that was going on, there was 100% financing for it too. So like I remember doing loans for people where it was like 100% financing on an investment property with no doc. And so at that time, interest rates were probably in like the 5s or 6s. So like with one of these loans, you're not putting any money down. So you have a first and second mortgage. So you have a first mortgage to 80% of the value of the house you're purchasing, a second mortgage for 20% of the value of the house you're purchasing.
So,
two different lenders taking on different risk, right?
So you yourself have like no equity in your home.
At the time that you're buying it, no.
Okay.
And so at that time, we were kind of in this like situation where values are increasing like drastically very, very fast. 2002 to 2007, you probably had, 70, 80% in some cases, like appreciation, and depending on the market you were in. So these like everybody felt at that time like it just doesn't matter. Just buy, get a hold of as much real estate as you can, however you can, and then you're going to make money.
Right.
And there were people using their homes like ATMs throughout the process. Like every 6 or 8 months they would come back and say, "I need more cash. I'm going to buy a boat. I need an Escalade. I'm going on a vacation to Europe. And it's just like the financing was there to push the demand." And so like if everyone in the pool of, people in your area are like a prospective buyer, prospective like borrower, there was like financing for everybody.
Right. And the more people you could finance and take on, the better your firm does. Is that right?
100%. Like you get paid. It's a commission-based situation.
How many loans were you doing? How do you think about a monthly or how like back then?
So it's funny because like at that point in my career, I wasn't like a front guy. I was kind of like Norbert's, protege. And so we had a team because he was doing these classes and we were teaching people, the ins and outs of the mortgage business. And then we were like mentoring them. But like Norbert was closing his own business and like I was kind of tasked like, dude, think about it. I'm 22, 23, 20, maybe 24 years old. And like I'm the one mentoring people on like how to get a mortgage through the process.
Probably like 40, 50-year-old people looking to get a house, and they walk in and see this 22-year-old kid.
Did you own a home at the time, or?
I bought my first house in 2004.
Okay.
How old were you?
24. Wow. And so, in Southern Highlands, it was, crazy.
Which is a really nice area in Las Vegas.
At that point, I felt like, things were moving so fast, and like the money I was making then, like I go from making, maybe $25,000 or $30,000 a year as like a cabana host to like making $10,000, $12,000, $14,000 a month, which is like
as a 24-year-old.
At that point, like all the money in the world, I was bulletproof. I thought I just, again, looking back at it, just wasn't smart, but it was a great experience to go through at that point in my life.
Was the thinking at that time, and I know you were young, so you may didn't have this thought, was that this was just going to go on forever? Was there any like conversations like internally that thought that like this is not something that can be sustainable?
It's funny because at that time I don't remember any of those conversations going down. Like everybody was kind of just like so like mixed up in it. And now looking back, and like it probably hurt me the second go around where like now I've seen that happen and I saw like the kind of like chaos that ensued. It's always I probably have like some form of PTSD from 2008, 9, and 10.
Yeah. What was something? What was a big purchase you bought? I know you bought a house. Did you buy anything else that was like that you was like, oh, that was young and dumb?
Well, so like I think I've always been pretty good about like I've never been into watches. I've never been into like real like I probably should be more because those are things that like hold some value. I'm I guess more into like experiences. Like went on like a couple of cool vacations. I like to go out and eat dinner. Like nice places like that, but like I don't feel like I really made any kind of like.
You didn't buy any like a car or anything that was.
Well, like I had like a 2004 Lincoln Aviator, and at the time that was like like a $60,000 car probably.
Oh yeah.
And so going from like a 1993 Ford Probe with like no paint on it to like this Lincoln Aviator, like that was a pretty big like
of course
move up.
Yeah. Did you have a house? I thought you had a house in Florida or something. You shared.
So like I had. It sucks because that ended up being all in Norbert's name. I was his partner on it and like was 50-50 for payments and for down payment and all that stuff. But we bought a condo in like Cape Coral, Florida in this really nice like a marina like community. And I saw it twice and never like we just didn't like really make a point. Like we were so busy here like trying to manage this team and like like literally bought like a $500,000 condo and we were so busy like we didn't rent it out, we didn't furnish it, we didn't like it was just sitting there. And I think we bought that in like 2006. And
how old was Norbert at this time?
He's like 4 years older than me.
Okay, so you guys are both in like your early to mid 20s.
Yeah,
just owning a home in Florida.
Homes like at that time like this is the best comparison that I can make. If you work at Foot Locker, you're like usually a shoe head and you got like a lot of different like shoes. At that time, if you were in real estate, if you were like a realtor or a mortgage guy, you kind of understood like, man, this shit is super easy. Like, you can sign up for the credit and like they're going to give you whatever. And so like I owned a home. I had like a condo in Bryan Head, Utah, which was like it was at that time not a crazy purchase. I think it was like $130,000, but it was like, in a ski resort, like all my friends had keys to it. They would like use it more than I did. They would go up and like some of them were like huge snowboarders. And then I had a place in like Boise, Idaho, place in San Antonio, Texas. You know, like random, like we thought we were real estate investors. We were like, oh, we're going to be like everybody else. We're going to buy a house. It's going to appreciate 30, 40, 50 grand. We'll rent it out. And
what ended up happening to all those real estate investments?
All of them were foreclosures or short sales. Like the big problem I guess I had at that time is like I was, 100% dependent upon the mortgage business for my income. Mm-hmm. And then all of my like assets were also real estate related. Like I had very little money in like the stock market, which also got just crushed in 2008. Right. So it's funny because I've done loans for like friends and they lost those houses. Right. Mm-hmm. And so like, it wouldn't have mattered how they would have financed them. Like I've had people say, oh, you wanted me to take out this like adjustable rate mortgage, or you did something like you wanted me to put less money down. Mm-hmm. And in some cases, like I still feel like those decisions made sense, because if you would have put 50% down and you would have had, a 30-year fixed mortgage, like it wouldn't have mattered. You were going to be like upside down in it. Like it was just such like an epic chaotic collapse that
did anyone during that time, be it on like the loan officer side or just your higher ups or anyone that you worked with, have this idea that this could all come crashing down, that this seems too good to be true?
I think that the best example that I could pose is like, if you haven't seen that movie The Big Short, like get that and watch it, because they did such a good job of like explaining it. Mm-hmm. Because you had just like a small, like it comes from the top down, right? So like you have like Wall Street, you have Lehman Brothers, Credit Suisse, you have all of these like huge multinational billion-dollar companies pushing this stuff to us. Like I'm at the bottom of this, right? I'm a loan officer. I'm like consumer direct. And so like it's coming from like the top, right? Like they're coming up with these loan programs, like an option arm. That was like probably one of like the, one of the things that broke the straw. And it was a loan program where you had 4 different payment options every month. You had a negative amortization payment, meaning that every single time you make that payment, the balance of your mortgage is actually growing because you're not making a payment large enough to even cover the interest on the loan. So you had negative amortization payment, an interest-only payment, a 30-year mortgage payment, and a 15-year mortgage payment, all on one loan. So like every month you got an option, like here's 4, which one you want to pick. Like what are you going to pick every single month? You're picking the negative amortization one because, the economy's starting to hurt, or, you have 5 other houses and you're, trying to make it all work. Mm-hmm. And so like those negative am loans were like just like a horrible decision, but they paid the largest amount of commission. So it was like, you almost feel like you're getting set up, right? Like looking back on it, hindsight's 2020, but it was like, why would the worst option for the consumer pay the absolute largest commission? That's how all sales work.
Right. And if you pick that negative, it's called negative amortization. Yeah. Like if you pick that one, then your firm gets paid, which means probably Lehman Brothers all the way at the top, that money just gets funneled up and everyone gets paid.
What they were doing, and again, you watch the movie The Big Short, and they did such like a amazing job of like making it super entertaining, because this is dry, right? Like it could get like real boring really quick.
Which character were you most like?
The guys in Florida that were talking about financing the strippers. Like I was a loan officer. They make the loan officers in that movie look like the biggest idiots alive, right? Yeah. And it was just like, unfortunately, that's like, again, my piece of the puzzle. I was, the sale at the end. Like they needed the sales force to push those products, right? But you have like the geniuses from Harvard, constructing these loan programs. And again, the movie did like an amazing job of like explaining. They just figured that like the U.S. mortgage industry had always been like a pillar of stability and strength. It's like a mortgage at the end of the day is a bond. And so like provides a fixed rate of return, usually like very safe. So they just figured that they could construct these like what they call tranches of mortgages, where like, you just throw in some of the garbage with some of the better, rated stuff where, people did document their income, did have a good amount of money down. And as a whole, that security, that tranche of mortgages would perform well. But then it's just like the amount of like garbage mortgages just way over met the amount of people that were actually, documenting income. And it's just, again, like the perfect like storm of like factors coming in.
When did you guys, you loan officers in your position, start getting wind that this might be toppling down?
Like end of 2006, beginning of 2007 is when like you saw, like there was a website called the Implodometer, which is actually back.
Okay.
But the implodometer was a website that somebody in the industry started, and as banks went out of business, they were posted on here, and it would be like stories of like, what happened, how many employees they had, who got put out of work, when they're ceasing operations.
Mm-hmm.
So that implodometer, you see that and you're like, oh, that's not going to be us. Like we're solid. And it's just like at some point, like it just hit everybody. We sent a ton of the business that we did because we were mortgage brokers to Countrywide. And so Countrywide's one of those names that's kind of synonymous with like the whole meltdown.
Mm-hmm.
And like when, Countrywide was like basically like done, like you saw the writing on the wall. And it's funny because like me and Norbert, we had a branch of what it was called Custom Home Loans. And it was just a mortgage brokerage, but the guys that own Custom Home Loans had aspirations of becoming like a bank. They wanted to be Countrywide because they all had roots and they all started their careers with Countrywide. So they joined a bank called First Magnus. First Magnus was like a medium-sized mortgage banking company. And so like we like joined up with them in probably like April of 2007.
So banks were formed just to kind of fund the mortgage industry.
Well, so like, yeah, like mortgage banks, that's a whole nother podcast, right? Like
Right.
of how like a mortgage bank is like put together and what it does. But they were like in the acquisition business. They were like taking down, like we had a mortgage brokerage of maybe 350 loan officers. So you take us down, you put us all under that flag. Now we're lending their money versus having the option of lending, 7 or 10 different banks' monies.
Yeah.
And so when they took over, it's like they own everything. You sign over all your leases to them, all your accounts are signed over to them. And it's funny because like I remember like things slowing down, but like we were still, making a good living. And then like literally getting paychecks, and it's like, man, these guys are about to go out of business, like rushing to like the Orleans because it was like close to our office, trying to cash these like last paychecks we were going to get.
Oh, man.
And like
Wow.
them bouncing,
Wow.
and then like, our office basically being just like shut down, the furniture and stuff you bought isn't yours. So like, just like kind of losing everything. And yeah, dude, like 2007 was like miserable. 2008, miserable, like looking for some other industry to get into, just,
So did you guys kind of fail at the same time as the Lehman Brothers and the Bear Stearns? And
I feel like they went out probably like 4 or 5 months before, well, not even that long. It's funny because like I go back and think about it, and it's like days were like weeks, because there was just like so much like info coming in and so much going on. And it was it's probably a few months between, like I remember watching like Fox Business News and CNBC and like Bear Stearns going out of business, and then seeing the stock market down like 900 points, which at that time was like just the end of the world.
Yeah.
Now it's like a Tuesday, right?
Yeah. Right.
But it was definitely like an interesting time to.
So what was your life kind of like at that time when everything kind of came crashing down?
Oh man, it was tough because I was most of the people I knew were of the thought that this is going to like turn around relatively quickly and they're going to like fix this, and it'll be kind of business as usual, like we're going through a rough patch. And so like liquidate, like instead of, it's funny, it's probably horrible to say, but instead of just, kind of throwing my hands up and, here's everything, like I just like literally went through all the cash that I had and just, kept making my mortgage payments, kept, kind of just living my life the same way that I was when I should have just been like, all right, so this is all going to go to hell, so I might as well just give it back now. Like, what's the difference between me giving it back today versus giving it back in 6 months when I have no cash?
Yeah.
So that was like a valuable lesson to learn if you're really like, done, dude. Just like the laws are in place for a reason, right? Like, it's funny because it's like a moral thing too. Like, do you like make good on your obligations? I signed the debt, but like, what do huge businesses do in the same situation?
Exactly. Yeah.
Got to know when to throw in the towel.
Yeah, for sure.
Yeah.
But it was again, I'm 27, 28, 29 years old and like lost everything. And again, like a great lesson.
Yeah.
And I, to an extent, probably have like some, like, again, almost PTSD from it, because in the last 10 years, I should have just been right back in there buying houses and doing what I could to, like create wealth again, because I've kind of seen it happen once. But like in my head, I think I'm smarter than I am. I'm looking like, we'll see if this continues. Like, I don't know, like there has to be a correction. There's not a lot of, the fundamentals aren't here for this to be happening the way that they're happening. But like one thing I've learned is like the market's going to do what the market wants to do.
Yeah.
You get enough motivation and you get enough people pushing in one direction, there's not a lot you can do to stop it.
Yeah. So you kind of fast forward through recession, you lost everything. When did you sort of kind of get back in it, or did you kind of stay in it?
I always had my license. I always like, it's funny because I would like take a job here as like, I was a insurance agent for Country Financial for a few years. And on the side, just like trying to pick up mortgages without them, knowing what was going on. I remember like 2008 was like horrible, dude. I was like getting into the timeshare industry. Like talk about like just a rough industry. Like, I have some friends that do very, very well in it, but I just wasn't like cut out to do that.
Yeah.
But like I did that for a while. I did like a couple different things just to kind of, try to hold life together, not really having like a super solid direction. Mm-hmm. And then in 2010, I got back in the mortgage business full time, and it was like an amazing decade.
Yeah.
Even like, into like the last 2 years, 2021 and 2022. Actually, 2020, 2021 were like, I can't see it ever being as good as it was based on the circumstances that were put forth.
What do you think made it so good? Such great years?
It was the fact that we went into a pandemic and the fact that the government decided that they were going to just basically print 40% of the money in circulation in like a 12-month period and provide just a massive amount of stimulus to like everyone in the economy. So again, I feel like I was a beneficiary of something that was really like artificial.
I see. Do you have any fears that those actions could result in something similar to like what you saw in 2007, 2008?
Yes, I think that there's definitely going to be like a retraction. The thing that I think is on our side this time is that everyone that bought a house between 2010 and 2022, even today, like they've documented income, they've documented assets, they've had decent credit. There wasn't like, the like amount of free credit out there where it's just like, breathe on the mirror, here's your keys. There are so many people that are never going to foreclose on their house because they have a 2.5% interest rate and they had such a great run.
Because it was like fixed back in those days?
Well, so if you go back to the early mid 2000s, like almost everything was an adjustable rate mortgage. There were very few 30-year fixed mortgages for like any of those weird, what do we call them? Exotic loans.
Right.
They're like the exotic loans. But like if you look at today, everybody that is in like the real estate market has like made great money on their houses, and like the majority of them are able to lock in a super low interest rate. And so that's like a pro and con, because in real estate you need velocity. You need there to be movement in some direction. You don't really care if it's going up or going down. Because if it's going up, people get incentivized to get in. They want a piece of it. If it's going down, the smart money's out there trying to, take advantage of the situation. But like as long as you have movement in one direction or the other, you're good. And I feel like we're going to get into this like stagnant market where there's not like movement in one direction or the other.
Do you feel like we're there now?
Yeah, I think that there's still like a good market out there. I feel like for the last 2.5 years, buyers were like on the wrong side of all of this, right? Like it was impossible to purchase a house because there was so much competition. Like a really interesting like statistic I bring up in a lot of my conversations, and one of the reasons I feel like we're not really set up for another like epic crash. If you look at 2000 to 2010 as like one decade, and look at 2011 to 2020 as the second decade, in that first decade, the United States built 65% more homes than we did the second decade. So like we have like a huge supply issue. There's just not enough housing, because if you look at household household formation, we have 14 million additional households in our country today than we did in 2008. So like, again, there is enough demand to like basically grind out and take up any supply that's out there. And so if you're looking at economy and like macro, like, situation, all supply and demand, right? Like supply, I feel like that's like a big problem that we're going to have with like the inflationary issue that we have, because the supply chain is so screwed up all over.
Yeah.
And we can't get enough supply of something to cause inflation to go down, because no matter how much supply is out there right now, there's the demand to eat it up. With, cars, refrigerators, air conditioning, like just like random stuff. Because like in the past, you would have gotten to a point where it's like, all right, so the price of that good has gotten so high that it's like the demand is like way diminished. And right now there's still enough people with enough cash out there that it's just like, I don't care what I have to pay for it. I just need it.
Right.
We live in like the most like convenient period of history ever, right?
Yeah.
Like it's like crazy. You go back and think like of us being kids, and like you just didn't get anything you wanted whenever you wanted it. I feel like my kids are, just basically like so everything's so at their fingertips. You don't have to say no for anything, and it's not a great, not a great thing. Like I feel like the struggle is important, right? And developing life skills to really like succeed. Yeah, we'll see what happens.
Yeah. That's an interesting comment you made about that. I mean, when we were kids, there was no Amazon. There was no 2-day shipping anything. Like,
you waited for your birthday. You waited for Christmas.
Yeah.
Like there were times when you were going to get stuff.
And you had to go to the store to get it, though.
Yeah.
It was no, like, I don't ever remember a moment in my life when I was growing up that I could just, the idea of ordering something online wasn't like...
I mean, Amazon's even moved up to 1 day or same day shipping now.
They got the drones coming now. I've gotten stuff delivered in 5 hours.
Yeah. I've got a 5-year-old niece who already knows how to use the iPad, how to go on Amazon, add something to the cart, bring it to my sister.
It's crazy. And again, like I think that like it's all gonna come to a head, right? Like our convenience and our technology will end up being our downfall as well.
I mean, if history repeats itself, it seems like at some point we're due for another slap in the face pretty soon here, I would think.
And it's all cyclical, right? So I think that like it's always going to happen, and it's always going to come back, and like history doesn't repeat itself, but it rhymes.
God, I love that quote.
And so like now kind of coming into this as my second round, I'm like just trying to like, make sure that I have some cash set away. I have some like ability to capitalize on the situation, I guess, to an extent.
Yeah.
Yeah. And I kind of feel like you're in a different phase in your life. You're married.
Yeah, I got 2 little kids.
Yeah. And so you're probably thinking about things a lot differently than you were when you're early to mid 20s.
A lot less willing to take on risk.
I'm still pretty risk tolerant, just because I know how quickly it can happen. Like if I lost everything today, like I have no doubt in 3 years I could, make it back. And I think that was like a valuable lesson of like losing everything, because it felt like the very end of the world. But like it's such like a fleeting thing, And it's like as long as the money and the stuff doesn't define you, then like again you can always make it back.
Yeah.
And that was like a valuable lesson, because like the first time, dude, I felt like I was a complete failure. And it's like one of those things. If you look at a lot of your heroes in life, how many times did they have to fail to like make it?
Yeah.
So like you can't be too hard on yourself when things don't go your way. At least you took the shot.
Right.
And
I like that. Yeah.
That's been something that, again, I'm trying to figure out. Like with my job as a loan officer, I feel like it's such like a 1 inch above the desk details, like trying to take care of people. And I need to be more like focused on creating a situation where like I can have people handle the details, and I can be more in the sky, navigating the plane. And it's tough for me because I have like a hard time with that, type of work. But I realize like that's that's where you want to be.
Yeah, and I think it's important to have people like you kind of at that bird's eye view level in your industry, because you've been through the ringer. You've seen how bad things can get, like in 2007, 2008, and you can probably make sure to like course correct the people that are like working with you, when things seem squirrely.
Yeah, and right now is an interesting time, because like every week I have a service that is like basically giving me info on the market. And so this last week, refinances are down 86% from last year. That was 65% of the business in 2020 and 2021. So like 65% of the business is down 86%. And then purchase business, which was like, the other 35, 40% of the business is down like 60%. So like if I'm feeling it based on what I did the last couple of years, there's some people dying out there, and this is their first experience with it, right? So it's like that's almost like an opportunity in itself, because 40% of the people licensed to be loan officers in the United States were licensed after 2019. Wow. So like 40% of my competition is like less than 3 years or 3 years into the industry. So you see it again, the implodometer's back.
Yeah.
You see, huge businesses like multi-billion-dollar mortgage companies just like folding again.
Well, and
The mortgages aren't going bad.
Uh-huh.
The debt instruments, the bond market isn't failing.
Right.
Because the mortgages aren't going bad. We have like the lowest amount of foreclosures ever. And it's because everybody that's bought a house is like, in it right. They got a great interest rate and they, have made a ton of money. And banks don't want to go through 2008 again. They're not equipped. Their specialty isn't in, foreclosing on houses and then taking them back and having holding costs and, selling them and doing all those things again. Like they will avoid that at all costs.
Yeah.
It's almost like they're willing to hold on to it. Like, what can you pay? Like everybody during the pandemic, the forbearance thing was like huge, right? There was like millions of people that were like completely capable and still had a job making money. And they were just like, oh, cool, I don't have to make my mortgage payment for 12 months.
Right.
Because the banks are just like, whatever we can do to make this comfortable. And it's funny because like I get people's mortgage statements weekly and I see like, oh, what's that like $27,000, like line item on your mortgage statement. And it's their forbearance amount, the amount that they neglected, or not neglected, but they like were basically not having to pay because the bank was like, well, when you sell or refinance in the future, we'll just make it up then. So nobody's foreclosing. And like now we're kind of past the whole forbearance thing, and like the banks they're not trying to foreclose. So
yeah, can you elaborate a little bit about? I know we spoke about this before about who, sort of the private equity companies coming in and buying up.
So
lots of homes.
It's
different now.
A lot of like real estate investment trusts and like huge companies like BlackRock, huge hedge funds have decided that there's like no better investment than real estate in the United States, and they have been buying at like a frenetic pace for years. So I think that this really started in like 2014. Market super undervalued still. They could come in buying cash. They're getting the money from the Fed window for like free.
And they're paying like way over asking price, right?
They started to towards the end of this last run. But like, again, like they started doing this in 2014. I feel like it went until 2016, 2017, stopped, kind of like caught their breath. And then they started like picking up the pace huge in like 2019, 2020, 2021. Basically, like in our market in Las Vegas, they were 35% of buyer of homes. Like there's like 6 or 7 hedge funds that like operated in Vegas, and like they're operating in Vegas, Phoenix, San Antonio, Austin, Dallas, Atlanta, Georgia, Nashville, Tennessee. And like what they're doing is they're purchasing in like a specific buy box where it's 3 to 4 bedrooms, no swimming pool, no solar, built after a certain year. They're like very specific in regards to what they're wanting.
Why do you think they're so specific?
Because they want something easy, turnkey for them to be able to rent. They slap some carpet in it, they put some paint on it, and then they can rent it. And like rents have been going up 7 to 12% a year. In other markets, it's even higher than that. So you have like something that was like positive cash flow, insane, appreciation, double digits a year. You have, whatever kind of tax benefits they get from like depreciation and things like that. So it's like, think about like them investing in the stock market, and then it's just like, you have the up and down of the stock, and then you have dividends in some cases, but you don't really have like all these like different like revenue streams. Real estate is like super unique because of it just not being like, hopefully I buy high and, buy low and sell high. With real estate, it's like, look at it for the last 80 years, 4.3% average appreciation. But then if you have like positive cash flow, you have depreciation, you have like all these different sources of income. It's just like really like amplifying what your return can be. So smart money, like these guys are brilliant, right? These people that work at these hedge funds, they're the smart money for sure. So they've been buying up real estate as fast as they can. And then it's just, that's kind of like, where does that foot drop? Like, what happens with them? Do they just hold on to these houses forever? It sucks for somebody like me because, again, I need velocity. I need movement. They're buying up all first-time homebuyer houses. Mm-hmm. So now these first-time homebuyers, like if I were typically to buy this house in 3 or 5 years, I've made money. I've paid down the mortgage. I've gotten, a raise at work. I've had another kid. I'm a move-up buyer. Mm-hmm. Now I'm going to sell it to one of you guys. You're the next first-time home buyer. That house is on a conveyor belt. Every 3 to 5 years, it gets switched out to somebody else, and that causes the velocity that we need. Mm-hmm. With these hedge funds, they're like, dude, we don't want anybody to buy a house ever again. Just rent from us.
Yeah.
And our whole entire society is becoming something where it's like pay for play, right? Like you're signing up for some sort of like monthly like obligation. You know, it's
subscriptions.
Subscription based. Like that's what all the huge money wants everybody to have to do. Like BMW is doing it for their cars. You want heated seats, $8 a month. You want, satellite radio. Like it's going to get to the point, like you want that left turn signal to go on. Like we need that $6, man. And like they're turning everything into a monthly expense. So like lower the price of the car a little bit. But if you want all the bells and whistles, prepare to pay us indefinitely. Scary.
Yeah, something that Tesla's done as well. I think with the heated seats in their cars, I think they figured out it was cheaper to just put it in every car, and then only charge people that only activate it in the cars that people buy it.
Wow.
Or like giving like the.
But it's installed standard in every vehicle, so they don't have to make different versions of the car with and without.
Smart. And it's like they give everybody the auto drive for free for 3 months. Like you're not giving that away once you've had it.
Do you think they'll get to the point where if you're not making your payment, they'll just turn off your battery?
That's why I'm fossil fuels for life, man. I rented a Tesla once. It was like the worst experience of my life.
Really?
I love the cars because like aesthetically they're super pleasing. The like technology in them is amazing. But I was driving a long distance and like screwed up on one of the charges, didn't get it like to the where it had to be, but like it's so specific. Like your destination is, D. You got to get to B. If you go over 65 miles an hour, you're not getting a B. Like if you can't, like, it's just like you have like a lot of like restriction. And like Gio just said, or one of you guys just said, like, what happens if like, like your social score is not good? They could just turn your car off. Like, that's scary, man.
Yeah.
But again, I had a bad experience. I really was thinking like Tesla's awesome. I want to get one of these one day, and then never.
Yeah. Going back to kind of your experience now versus experience then, what do you think are some of the lessons that you learned back when you were a young loan officer that, and seeing what you saw back then that you applied to your day-to-day practice now?
So I think that like I've gotten to a cool spot where like I've been in the industry almost 19 years. I've closed over 2,000 loans, or been a part of closing over 2,000 loans. And so now for me, it's not really about like the money. Like when I was like, 26, I'm like, man, I'm going to close 6 loans this month. I'm going to make $28,000. And it was like, I was so like financially motivated. And now it's become a situation where like, I can like honestly try to advise versus sell. And I don't really care about the money, because once I don't care about the money, the rest of the job is super easy. Once it's not about like, I have this nut I need to hit, I need to make this money. And it's like really hard. I wish I could like transfer that over to like some newer people, because they struggle with like, man, I got a car payment due. I don't know how I'm paying rent this month. So like they're very financially motivated, and it's a good motivator. But like if your motivation can honestly be like, I'm excited for the consumer. I'm excited to like educate the consumer on like how this works. This is a huge decision they're about to make, and just like arm them with the information to make like the right decision.
Yeah.
Because like there's people like where like, again, a super shiesty salesperson will come in and kind of steal the loan. And that person will come back to me and be like, dude, I made a huge mistake. You were like the only one trying to be honest with me. Some of my best referral partners are people I never closed loans for, because I was like the only honest one. So it's like cool to be able to like look at the industry through that lens of just, I'm here to advise, not sell. Because like at the end of the day, the mortgage business is like, it's a lot simpler than you would think. There's like literally 2 loan programs that make up 95% of mortgages being done. Conventional loans and FHA loans. That's like the majority of everything. And then Fannie Mae and Freddie Mac are the ones providing like the rules and liquidity for both of those loans. So like whether you're going to Bank of America, Wells Fargo, to me, to Rocket Home Loans, like we're all playing by the same rules. We're literally all using the same programs and guidelines.
Right.
It like comes down to like your essential knowledge of how the industry works, your customer service levels, and then like at what expense can you operate at? Because we're almost all getting the money for the same exact cost too.
Yeah.
But if I have Super Bowl commercials and I have a box at Allegiant and I have a 401k match and I'm going to Hawaii every year because I hit my numbers
Yeah.
with company incentivized trips, like now my expense is huge. If you walk in and I got a $40,000 a month, like beautiful office, like that costs something to walk into, right? Nobody wants to see me in person anymore. I meet one out of every 11 people I do a loan for. And so, like, I don't have a cool office. I don't go on company incentivized trips. I don't have a 401k match. I want to keep my expenses down super low. So this is something like I explain to consumers as they're like coming to me, like, what's different about you? And most of the time they won't even ask. I just tell them, like, check it out. I don't care if I close your loan. I really want to, but like, I want to just give you the right info. If you find a way better deal, cool, take it. But like, I want to be your guy in the future. I want to be like your buddy in the mortgage industry. So
Right.
like, if you need help, you have somebody that isn't like, man, how am I going to make money on this guy this time? Because like the money becomes super easy when it's not about it, that piece of it.
So do you think that those changes in motivations are not necessarily unique to you, but kind of a smaller group of people, that it changes with experience and age, or is that industry wide?
I think it's definitely like experience wise. There are some people in my industry that have closed way more loans than me that are just really like financially motivated. They want to make, $1 million a month.
Right.
I've met people in my industry that like literally make millions of dollars per month. And like, it's just like every cent is accounted for. There's never a discount. I couldn't operate at that level just because it would be exhausting.
Yeah.
And it's just, like I don't care about the money that much.
Yeah. So now that you have a wife, 2 kids, tell me, what are the things that you like to do now that interest you and I'm betting you're going to tell me it's all about your kids and things like that. But what are some of the things that you like doing now that are a little different than you did back then?
I feel like I've always kind of been like, me and my wife are like introverts. Like if it's just me and my wife and my kids, like every day for the rest of my life, it doesn't really like bother me that much. Like I have a great time with my wife and my kids. And I've always kind of been like that, like I feel like, I've never been like the ringleader of like, let's all go out to a club. Let's all go here. I've never like, it's most of my experiences with like large groups are just like, me being part of the group, not being like the leader of the group. I don't know. Like I really enjoy trying to like be as involved in basketball as I can be still, because I realize that like windows closing on me pretty fast.
Yeah.
So like, before I came here today, I was at a gym doing plyometric training, like athletic preparedness training. Like it's funny at 42 to, like do those things, because I realized that, again, my window's shrinking and like I have some money now. So like I invest in my body. And I have fucking so many gym memberships, it's ridiculous. And I'm like, putting all this money into like me and my body, but I feel like that helps me perform with my job. I'm never like sluggish. I don't have, ridiculous blood pressure. Like with my job, as stressful as it is, it's like super important to be like really concerned about your temple, your body. Because I have friends in the industry that are, 30s and 40s with like, 170 over 120 blood pressure. Like I'm like 118 over 74, like
Supposed to be.
yeah, it's like again, I feel like part of like my success with mortgages has been my like pursuit for like mental and physical health. So I really enjoy just being able to like spend time playing basketball, working on my body, and then as you have kids, man, it's like amazing the transition that you go through, wanting to see them do well and kind of experience things through their eyes.
Yeah.
That's a mind-blowing thing that you don't realize until it happens.
That's good.
I want to travel. I want to like give my kids experiences traveling. And like the pandemic has kind of screwed that up, but they're also not quite old enough to really like appreciate a lot of the things I want to show them. But I'm like really like looking forward to the future in regards to just like making them very worldly.
Yeah.
And I have 2 girls, man. And then like, I want them to just really never fall for anybody's bullshit. Like I want them to like, kind of, have the ability to like, just have great experiences and then have like opportunities so that, again, they never get into a situation where it's like something that is an opportunity for them that isn't in the right like context. I guess, being a girl dad, you kind of worry about, people's motivations. It's just, that is another thing that I never really realized, how like protective you're going to be over your kids once you have them, especially if you have girls.
Oh yeah. I can see that. Well, man, this has been a freaking terrific podcast.
How long have we been talking for?
1 hour and 1 minute.
Yeah.
Man.
This is...
Yeah, dude.
It went by quick, didn't it?
Sorry if I talked too much.
No, man, that was
No,
great.
it's
That was
awesome.
absolutely fantastic. I really appreciate you coming on, man. I mean, that's you were one of the people in my life that I wanted to have first on my podcast, man. You mean a lot to me, and I've grown up with you, and we've got close, and just running to each other through the gym and through college and through the fraternity and now business, man. I really appreciate you being my friend, and it was a big motivating factor for me picking you.
We're gonna have to like flip the script one week, and we'll have like Ben be the focus of attention because like I have like a ton of like respect and admiration, and I'm really glad that you're in my life as well. It's cool to again kind of meet somebody in different stages of their life, but realize that you're like your values and like your goals align. And it's like one of those things, like if I didn't talk to Ben for 6 months, we would pick up right where we left off.
Yeah.
But then it's like awesome also that he's like somebody I talk to several times a week.
Right.
And yeah, like it's funny because your like circle gets smaller and smaller as you get older and older. And I'm super fortunate to have Ben in my circle.
Yeah.
And yeah, like again, I think that we're gonna do amazing things moving forward. And I'm glad I was number one on the podcast.
Yeah, thanks for coming on, man.
I appreciate
Great
it, man.
conversation.
Thank you.